Okay, finally, let's look at cross-cutting topics very briefly, and then this will be the end of the clip. Uh, Financial inclusion, anti-money laundering and countering of terrorist financing, capital market development, and financial sector liberalization. That's four issues that I will be dealing with here. So, financial inclusion. Financial inclusion has been a very important theme of the National Bank regulation in Ethiopia. The National Bank has enacted many directives in order to ensure that financial services are accessible to the wider society in the country, because without access to financial services there can't be meaningful development. That's why financial services, credits, loans should be accessible to everybody. In many developed countries you have loans of different types, like student loans. Every student who goes to college has access to finance, borrowing, paying for good college education, and then you pay later. So that's how financial inclusion is all about. Financial services should be accessible to all people. One of the most important directives to ensure financial inclusion is this agent banking directive. Banks are required to have branches all over the country. Insurance, they are required to have branches all over the country, because there is this requirement to increase their new branch opening. But even without using branches, they are empowered or authorized to use agents. Agents are simply vendors, different types of business, small businesses, vendors, the traditional souks. There are hundreds of thousands of them in Ethiopia. So if financial institutions can use, if banks and microfinance institutions and payment instrument issuers can use these souks as agents to provide their service to society, then it means that you can take banking services, financial services to the doorsteps of every household. That's the purpose of agent banking. That's a very important directive. The first agent banking directive was enacted in 2012, but in 2020 new agent banking directive has been enacted, which actually introduces a very complex type of agent banking: simple agents, super agents, sub agents, different types. Read that directive. And uh, the law also has relaxed uh, different types of partnerships, use of technology, service providers to partner with financial institutions to make financial services more accessible. These new products like payment systems aim to expand financial services. So the objective is partly financial inclusion, apart from the modernization, which appears to be a very important objective of that law. We also have movable security right registration proclamation, which actually aims to make all types of movable property to be collateral for purpose of enabling people to borrow funding from banks. So every type of movable property can be a collateral. So this much about financial inclusion theme. Look, if you are more interested to read here, you can look at financial inclusion strategy of the National Bank, which is very easily accessible from the National Bank's website. Uh, we also have, as another important regulatory theme, cross-cutting regulatory theme, we have anti-money laundering and countering of terrorist financing, which is very okay. Anti-money laundering and terrorist financing requirements are also cross-cutting regulatory themes in financial regulation, almost in all over the world. Financial institutions, because of these regulations, have key obligations. One is know your customer obligation, or customer due diligence obligations. Financial institutions, insurance, banking, payment, MFI, they all have to make sure that they are serving the right person. That includes that entails actually um, identifying their customers. Who are their customers? So they have to take, if a person opens an account, they have to take, address, proper identification document, and so on. So it's very cumbersome. It takes time for you to open a bank account because of these requirements. You may take up 30 or 40 or 30 or 40 minutes or an hour to open an account, because the bank has to make sure that you are not using the financial industry service for laundering money obtained through an illegal means, through corruption or whatever, or you are not using the financial services industry to finance terrorism, to transfer money for terrorist purposes. And part of these regulations include, for example, the requirement on each bank, each financial institution, to report transactions beyond a certain amount of money. Or normally, if a person deposits or withdraws an amount of money more than 200,000 birr, that person has to be, that transaction should be reported to the national bank for the national bank to follow up. So that's part of this customer due diligence, or know your customer requirements. Financial institutions, especially banks and insurance companies, are required to have department level organization structure to monitor and follow up reporting of these requirements. So much about that. Now let's come to capital market development. Capital markets is a very important and interesting regulatory theme also, since recently, especially Ethiopia is now embarking on capital market regulation. What's capital market? Capital market is a market for capital, meaning in a very oversimplified sense, it means a place where buyers and sellers of capital come and exchange. But this is oversimplification. Capital markets not simply a physical location. It can be an electronic platform actually. So it's not about a physical location. It's about the system of institutions and schemes that enable investors of different categories to access capital from the public. So if we say capital market is a market, a system of many institutions that together make a capital market, who are the buyers and sellers, and what's being bought or sold in a capital market? Buyers of capital, investors, share companies under Ethiopian law that want long-term capital for investment. Capital can be obtained from banks through borrowing. In the capital market in the banks is involving banks, microfinance, payment service, payment instrument issuers, etc. Said to be money market, short term, for 1 year. Here, capital market as opposed to money market, because it's a long-term capital. We're talking about long-term capital beyond 5 years, usually. More than 1 year, but usually for a very long-term duration. But that time is not that much important. Now, who are the buyers of capital? The companies, share companies. PLs cannot be buyers of capital in an organized capital market. Who are the sellers of capital? Individuals, saving. Give your money, take something in place of it. So individuals, collective investment bodies like mutual funds. There are mutual funds that collect different contributions of members and manage it as one entity. Pension schemes are a good example of mutual funds in Ethiopia, not in Ethiopia, in many other countries. So these are again investors, individuals who invest their savings in a share company are also investors. So capital markets is a market between investors. Uh, let's look at if we say capital markets, the system of institutions rather than a simple place where people go and buy and sell things. Then what are these institutions? It's an ecosystem of institutions. So what are these institutions? There are regulators, capital market regulators. There are marketplace managers like exchange markets or marketing platforms, maybe physical or electronic marketing platform, which is known as the exchange, stock exchange, for example. Security issuers of the instruments which are traded on an exchange, shares, bonds, etc. So security issues like the companies, bonds, stocks, security depository and clearing institutions, very important institutions, because when shares and bonds are sold in stock exchange, after a person has sold his shares, the buyer need not go to that person who has sold the securities and verify whether the securities exist, whether they have been lost or damaged, or what. The security has to be in a central depository, so that easily after trades are concluded, easily payment and settlement or clearing and settlement service will be completed. Securities will be transferred, payment will be made immediately. So that's why security depository and clearing institutions are very important. They take deposit of all the securities traded, and they also make payments on behalf of buyers. Usually before the trade takes place, the securities should be deposited in the depository, and payment should be there or easily accessible by this security depository institution or a financial institution, so that payment will be immediately made and no default can be a possibility. And then you have buyers and sellers, liquidity. So buyers and sellers are also the other part of the capital market ecosystem. Who are buyers? Who are sellers? Well, sellers are the companies, buyers are investors, individuals, households, big institutional investors, and so on. They all come together. But here we have to distinguish between a primary market, where a stock is issued for the first time by a company, and the secondary market, where owners of stock which has already been issued do trade that stock. Intermediaries, investment banks that advise issuers, advisors, investment advisors, analysts, and auditors. Most of them serve both investors, both issuers and also the buyers. Okay, what are the typical types of products sold on capital markets? What are the typical types of products or securities sold on capital markets? Here again, it's good to distinguish between underlying products, underlying instruments, such as stocks, bonds, and currencies, and derivative instruments, which are actually derived from the underlying instruments. Stocks have derivatives. For example, options are derivatives, swaps are derivatives, spreads, indexes or indices are also derivatives. What's the derivative? If you have a stock, for example, if you have a stock, you may sell or buy options. Options are two types: put option and call options. The put option gives you the right to sell to a particular buyer your stocks or the underlying uh, security instrument, bond or stock or currency. So option, if it's a put option, it gives you the right to sell to that particular buyer. If it's a call option, it gives you the